All right, good morning, guys. So, the market is closed today, but that doesn't matter because today I actually want to teach you something particular. Um, Usually in the market, there's sort of resistance and support levels. In the market, there's patterns, which I'll show you in a bit, and they look like this. Let me show you. If we change the time frame to hourly, there's a sort of pattern in the market, and it's called a flagpole. At least in this case, what I'm going to show you is called a bullish flagpole. Now, what is a flagpole? Well, a flagpole happens when you think of of a flagpole. A flagpole physically looks, like this, right? That's a flag. That's the flagpole. Well, in the market, it's sort of the same thing, only that it's sort of tilted. So the way how we identify a flagpole is first a point A and point B. It's the first thing you need to find is that the price has been going up. Okay. And this is a short term indicator. So it shows that the price has been going up in the short term. But then once it gets up to this high, it starts to go down. Right. So once it starts to go down, once it starts to retrace, this is when we form a flagpole, right, at this level. And the flagpole is done from this top right here and this bottom. This top represents the prices respecting a price level on top, and this shows the price movement as it's gone down. So it would be traced right about there. Once the way how we enter this is there's actually two ways. The first way is you can enter from the bottom, right? So you can enter a rebound. There's pros and cons to that. And you can also enter in breakouts. So in a rebound, the pro about it is that you get, the cheapest level, right? Because you're more sure that if you enter at this bottom, you're going to enter at a cheaper price compared to entering at the breakout. The only problem is that if you sometimes it won't be the bottom all the times. So the price can actually possibly still go down, right? But that's why we have stop losses. Okay. Now let's talk about the breakouts. A breakout occurs whenever the price has broken above the flagpole, right? In this case, this is for a bullish flagpole. I'll explain in a bit a bearish flagpole, but that's for a bullish flagpole. It has to be looking like a normal flagpole. But once it breaks out of that flagpole, what's important is to see that the price that's breaking, the candle that's breaking, is completely bullish. Okay. And you have to test whether that bullish candle is confirmed. So that could be test with, volume. That could be test with any additional support, that sort of thing. In this case, the price has broken above it, but it doesn't show that the price has failed, right? Because the price didn't go down, but the price has been consolidating. So what's likely to happen, really at this point, you could say that the flagpole is actually staying the same. So that happens often. If the price wasn't able to break out of the flagpole yet, right, but it still hasn't gone down, that means that the flagpole is still intact, meaning that this top flagpole level is not there anymore. It should really be traced like this. And this right here should be traced like this. So what you have now is really something that looks like this. This is still a flagpole in the market. This is what we see here. Only that the next time if the price does go down here, well, this makes it as an attractive area to buy. And if the price breaks out of it, recall that this can also be an attractive area to buy. Okay, so those are for for bullish flagpoles. So here's one. This is a bearish flagpole. Why? Because the price has gone down, right? Remember that this is a short-term indicator, so the price has gone down. So you trace a line like this. But once it's gone down, you have to see that the price has rebounded which it has. So since it's rebounded, then you can trace the flagpole like this, right? So this is what's called an inverted flagpole. It happens like that. Or in some cases, you can have something that looks like this, right? Something of that context. That's what's happening here. If you trace the line like this, which let me do this better because this looks a bit confusing. So if you trace it like this, right, this would show that the price has respected this area of the bottom flagpole, and right over here in overall the price is respected. So in flagpoles, for a bullish flagpole, you want to see that ideally the price is continuing, right, in this bearish movement. So if you trace the line like this, and you can see that the price broke below it, however, it hasn't completely broken below it. So this doesn't mean that this is a false breakout, right? If it had volume and all the other sort of indications, because there's still some time left. I do want to let you know that sometimes a flagpole, it depends on the time frame, but sometimes a flagpole, at least on hourly, takes several days until it can go down. This has only been the result of one day. Okay, so there's still a lot more to come, and we have yet to see if the price will come down. Some cases, though, the price doesn't go down, but it moves invertedly. So instead of the price going in the direction, right, sometimes the price can actually break out of this flagpole, which can happen possibly here, right? So when it breaks out of this flagpole, out of here, this can also be an entry. So the great thing about flagpoles is that you can enter with the direction, which is likely to happen. It will continue it, or sometimes it can invert and break out of the direction, which can also help as an entry. So with flagpoles, it really goes like this, or it goes like this, depending the sentiment and momentum of the stock or whatever asset you're looking at, whether it's in cryptocurrency, because this you can use this pattern not only in stocks but in futures, options, crypto, anything. Now, I don't know if you noticed, but when we mentioned something about Nvidia, because that's what we were looking at before, I said that now this looks like this, where because the price hasn't been able to break out of here, it's been consolidating. You might be thinking, well, that's kind of the same thing what's happening with Microsoft, with what we were looking at. Yeah, actually, yeah, really, it is. But what I said before is also true. So if you haven't entered in this flagpole, let's say you're looking at this right now, you would really trace it like this, because this would also count as a flagpole. Okay, so once this price breaks it, because recall that, why is this now a new flagpole? Because this is the low, remember? That's the low. So even though the price has broken below it, it's been still kind of respecting this low because it hasn't gone below it yet. It's been, look, the price went down, but then it went up a bit. So this could count as a little support. And recall that this is short term, so all this stuff validates. Now, it doesn't mean that this entry that you did right here isn't correct. In fact, it is correct. It's just that the price hasn't been able to successfully move with the momentum as you expected, but it still doesn't falsely signifies what you did. So this validates if you're entering a bit later. And so, in fact, even what I would do in some contexts is, even in flagpole entries, and I see this sort of area moving, sometimes this can happen. So maybe you can risk a little bit less. You can risk maybe 1 to 2 quantities of what you're going to trade. And then once it breaks out this low to confirm that it's going to go down completely, then you can enter with, let's say, 50% more than the amount here, or double, right? That's just the intelligent way of trading. All right, that's it for today. That's flagpoles. Was pretty instructive today. Recall that these are lessons that we do every day as live classes. This is a short lesson. On our website, on Selection, we talk about these lessons in depth. In fact, if you guys would want to join these live lessons, I actually go in depth and schedule a meeting with any of you guys to come in, and I would talk to you personally about this, and I can teach you each of these patterns, what I'm looking at. Don't worry though, you have 7 days. If you aren't satisfied from what you learned, you can get your money back. So it's very safe, and that way you guys can actually take advantage of these opportunities. Believe me, the markets are always moving with a lot of volatility, and sometimes people miss these opportunities that are very clear. And they miss them because they don't have the knowledge. And I've been trading for many years, and one of the most important things that I've grabbed upon is that sort of knowledge and experience. So I will take advantage if I were you. All right. But take care, guys, and I'll see you tomorrow.